Welcome, ladies and gentlemen. This is BetterTrades coach Robert Roy. Welcome to our market update brought to you by RobertRoyTrader.com. Let's go ahead and jump right into our disclaimer. Basically, it says, I am not an advisor. I cannot legally tell you to buy or sell a stock. It is against the law. The SEC, which is the Securities and Exchange Commission, requires you to be licensed in order to do so. I am not, and I do not want to be. So if you find a candidate, indicator, setup, something, anything that you like here today, my suggestion is you paper trade it first, before ever putting 1 penny of real money into that trade setup or indicator, and then and only then would you do so if it fits your own personal risk profile and risk tolerance. Now, keep something in mind. Because I am not an advisor, that means I am not under trading restrictions. That means that I may choose to enter or exit a trade at any given time without prior notice. All right. So guys, let's go ahead and jump right in. This is a great day to do the update because of what just happened with the S&P 500, not only in the last 2 weeks, but in the last 2 days. We have two diagonal lines drawn on the S&P. This upper line, if we go way back in history, this upper line, the one on top, right here, the diagonal line, you could see has played a very important role for us all the way up. The lower line is the outliers when we've broken out where have we gone to, right? And I'll just give you a little bit less time there, but you can see we pulled down into this zone, and in the last couple we really didn't get down there. The previous break we got close but not quite, and this one we got back down to that level again. So between the last 2 days we're down over 20 points on the S&P 500, which is a big move, 2 cars worth of move over 2 days. So 1 full car each day on average. And it's been a big move overall. So let me take the crosshair off there to not mess things up. So guys, my first target right now is this diagonal trend line, which puts me at about 87 or so, 89, 90, somewhere in that range, depending on how soon it hits over the next couple of days. If it violates that, folks, we could potentially have some serious problems. Now, we've broken through once before hard, which was the setup of our most recent Fibonacci on there. If we cannot get back up above that range, guys, with summertime being here, the bears might be able to get some control here, and the bulls just start selling positions off, saying, that's it, I'm going to lock in the profit, trade May and go away, and just lock our profits in. If we do get to the upside, you've got 2 lines drawn on the top there, which is the 2130.82, which is our all-time closing high, and 2134.72, and I might be off by a penny or two, but I'm close, which is our all-time high that we've put in the market, right? So they definitely are our stopping points. From there, there's a lot of room up. We're looking at 2145 and then 2173. So plenty of room to the upside. Let's go take a look at the fear factor, which is the VIX. And then I've got a trade I want to show you guys. That looked terrible. So guys, we had this a little bit longer term line come down, which we violated, and we had to. We're down at the 11, 12 level. We can't stay there forever. So we came off of these tops, 1, 2, 3 right here, and we're pushing up. Once again, it gets to a point of no return, right? You get down to 0 at some point. If I drag this out far enough in time, it'd make it down to 0, right? You can do it. It's actually negative now, right? So no matter what, you could get there. So those diagonal lines, as we get into these lower price positions, can only work oh so well for us. But the horizontal lines, this 1590 level, this dotted line, has held extremely well. And there's a confluence with the diagonal trend line and that dotted line right there. Remember, VIX is an inverse relationship to the market. When the market's up, the VIX is down. When the VIX is down, the market's up. It's not a guaranteed given. It has to be. The market could be down a little bit and the VIX could be up a little. There are other factors involved there. But generally, what a high VIX represents is high fear, which means high put value. Low VIX, low fear, low put value. All right, so let's go take a look at one particular trade, which is WYNN. W-Y-N-N. And I took the liberty of drawing some arrows on here, and I just got done teaching a Market Insights video, the video newsletter that I do, and which is a premium newsletter. Inside of there, we just finalized this trade up today. We just closed it out on Friday. We went over all the details of it, our last exit. Guys, I am famous. I am known for something called the 4-3-2-1 exit system. Well, we scale out of 40%, 30%, 20%, 10% of our contracts. Right? It is a system that I have created. I have not learned it elsewhere. It's something that I came up with. And for those of you that are getting out of trades too fast or staying in trades too long, this is the methodology that you definitely need to employ. It will dramatically reduce that from happening to you if you will follow the rules that I teach inside the Market Insights. So on this day, we had a note in our tracking sheet which has a listing of the stock name, bullish or bearish bias, neutral, and some other biases we have, and then our bullish and bearish targets and a trigger. What says we should get into this one, or how do we want to trade this one for the next day? It could be a day trade. It could be bullish if it gets above the moving average. It could be bullish or bearish below this price. So we entered on this day right here. And our entry on win was right about 116.5, right on that day. And we had our next line was our first target. Now, we have a rules-based system on the exits, which I don't have the time to go into here, but they're in all the bonus videos that I teach inside of the Market Insights. There's about 3 hours of bonus videos in there, tutorials that are on your My Account page. So we scaled out of 4 of our contracts right about 112, right? Awesome. So we got about $4,000 in profit there, $4 in profit per contract times 4 contracts of the 10 that we took. 2 days later, we scaled out of 3 of our contracts at 107 3/4. So once again, did extremely well. We were not stopped out of the position. We maintained our entries and our exits just fine. And our next target came on this day, long black day, right at that 103 level was our exit. We only had 1 contract left at this point, and that's what we managed our way out of today, was the 1 contract. And basically, we got stopped out on Wednesday as we went above the 5-period moving average, closed above the 5-period moving average, and we were stopped out of the trade. That trade netted us on win on a stinky little stock. It's not a Google, it's not a Priceline, it's not a Netflix or an Amazon. It is a fairly low price stock in comparison to some of the ones I trade regularly. And we were able to net $8,570 on that trade, on this little $100 stock. Now, granted, it was $116 when we got in, right? But it's about $100 when we got out of our last exit, roughly. So, guys, when we look at this, and I've got a couple of things, I'll share this with you. Let me do this. Give me a second. Okay. So, guys, this is our tracking sheet. Now, I've got the symbols hidden. I can't show them to you. These are ones that the people that are in the insights these are trades that we're in right now. When you're in the insights and you understand the rules, and I'm not concerned that you're going to get your head lopped off, you'll start to see these same companies with us and the symbols that we trade. But for now, just so you understand, right now in open positions, we are up $3,950 right now. Total in the closed box, a different page than this, we're $1.5 million. And that's from January 28th of 2014. This year, 2015, we're up $593,240. And our total P&L since we started tracking was $1,571,389. So we are kicking tail and taking numbers with the system that we use here, guys. And of course, each and every one of these are non-funded trades. We are not allowed to discuss our funded trades. Every one of them are non-funded. But guys, I give you all the signals, all the details each and every day. So come and check it out. There's a few other videos on the robertroytrader.com website that you'll be able to see just like that. So there you have it, ladies and gentlemen. Have a wonderful day. God bless. And I'll see all of you at the next update. Take care now, folks. Bye.